Hello, and welcome back to the Macro Gamer channel. My name is Mark Cassingham, and today we're going to go over week 10 of our portfolio update. Every week I give you the same update just so you can track the portfolio's progress. So let's get into the numbers. So here we are, Saturday, September 28th, going to be week number 10. And I took this snapshot yesterday, Friday after market close. That's why it says 927, but we're filming this on 928. So this is our current portfolio net worth. We're at $195.26. You see as the pie chart is laid out, the two biggest slices here on the right side, those are still our bonds and gold, as we're weighted 30% in each of those ETFs. Here's our portfolio weekly data, our chart for week 10. So remember, you see this large stair step. Whenever that happens, about every third week of our portfolio, we're auto depositing in about $30. So we're dollar cost averaging every week. So a dollar cost average $10 into the cash account every single week. And once that cash account gets over $25, it auto deposits it into the portfolio and invests it for us. So remember, this is like auto deposit. So just keep that in mind whenever you see this large stair step. That's not portfolio performance, that's a cash deposit. Our portfolio performance is down here to the lower right, the money weighted rate of return. So we're up 0.77% this week. That net cash flow, which is right here, that $30 basically, that 29.63, basically $30 right here, that's what you see. So the starting value for this week is $164.29 on September 20th. The ending value of September 27th is $195.26. So we have a market gain of $1.34, and we have a dividend earned of 0.06 cents. And that's our weekly data. Now we have our portfolio monthly data for the week. So you see two stair steps in this. So this was a cash deposit on September 4th, again $30, and then the cash deposit on September 24th right here of $30. So $60 net cash flow, you see right here, 6106 it says. $60 of net cash flow. Now our monthly weighted rate of return, our performance of our portfolio for the month, or for this month of August 27th to September 27th, is we're up 3.01%. So we started a month ago at $129.94, and we're at today $195.26. So we had a market gain in that time of $4.26. And we have a dividend earned of 0.52 cents or 52 cents. So this is our portfolio monthly data. So you're going to see those stair steps about every third week, and that's just auto depositing the cash because we're trying to grow our portfolio, right? We got to put money in it for it to grow, right? And the assets we're investing in, we're allocating a certain percent, right? And that's what we're getting to next. So as usual, we have our portfolio weekly percentages. Currently right now, we have our bonds ETF, which is GOVT, up 0.02%, or for a market gain of 1 penny. Astronomically good, 1 penny, right? We are still positioned 30% into bonds, as you can see, 30%. We have our gold ETF up 1% for the week for a market gain of 55 cents. We also have that at 30%. So remember, these top two, bonds and gold, comprise 60% of our overall allocation in this portfolio. So everything left is 40%, right? So less than half. So we're more cautious on the market. And gold, there's no reason for anybody to not own gold. Since the beginning of the year, it's outperforming the S&P 500. So whatever kind of negative feelings people have about gold, the market performance speaks for itself. So next one, our US dollar ETF, UUP, down 0.18% for a market loss of 5 cents. We have that at an allocation of 15%. Our equal weight S&P 500 ETF, RSP, is up 1.22% for a market gain of 22 cents. We have that at a 10% allocation. And the stock market has been doing good this year, but overall, the economy I'm not as optimistic on, so I have it at a 10% weighting, even though it has performed pretty good. So that 10% this year has done pretty good. Our next, we have our commodities ETF, USCI, up 1.54% for a market gain of 28 cents. And we have that at a 10% allocation. And remember, we reduced that not too long ago because commodities was coming down. And then we have our Bitcoin ETF, IBIT. Remember, we changed a couple weeks ago from the BITO ETF because it's losing correlation to Bitcoin's price. And I want a better correlation more than anything. So we're up 4.39% for a market gain of 39 cents. And we just have that at a 5% allocation, our smallest allocation. And that's primarily due to primarily due to volatility of Bitcoin, and I'm less optimistic on the market. If I'm more optimistic on the market, I would put money into the RSP first, more likely I should say, the stock market, and then later some into Bitcoin. Bitcoin is just like a call option on the market. You know, it's going to be a lot more volatile. So that's our portfolio weekly return. Now let's look at our monthly return for these assets. So government bonds up 1.03% for a market gain of 49 cents. Gold doing a fantastic, up 5.29% for a market gain of $2.52. Like I said, gold is doing great. US dollar up 0.34% for a market gain of 8 cents. Stocks also again doing good, can't deny it, up 3.23% for a market gain of 51 cents. Commodities up 2.61% for a market gain of 42 cents. And IBIT up 13.74% for a market gain of $1.12. Now keep in mind that IBIT, I don't believe has been in a full month yet, so this isn't a completely accurate number because again we switched from the BITO ETF, but still doing pretty good so far. So these are our monthly percentages, all in the green. We love seeing that, all in the green, right? Now, I did have a portfolio transaction this week. So on date September 25th is when the transaction happened. I had 5 buys. So this is that $30 I was telling you about that came into the account. So of that $30, $29.63, we bought 5 different assets based on their asset allocation. So RSP, which is 10%, we spent $3.22. USCI, which is also at 10%, we spent $2.79. UUP, which is at 15%, we spent $5.60. GOVT, which is bonds, which is at 30%, we spent $10.52. And gold, which is also at 30%, spent $7.50. So we added this to all our ETFs. So just keep that in mind. $30 added into these prospective ETFs, and this is how much got added to each one. Okay. Now on to staking. So good news for Illuvium staking. We got our second revenue distribution payment, our second one, right? So we're 2 in. We're building some consistency. We had the other one a few weeks ago. So hopefully, I don't know, maybe once a month, maybe once every 2 months. I don't know when the payments will be paid out. It's dependent on the pool holding around 150 Ethereum worth, right? So the total worth of 150 Ethereum. So when it gets to that amount in dollar terms, you know, they pay it out. So for the the current price as of today, we're at $44.32. You see right here. We added to our staking, so we're now up to 3.12 IOV staked in this portfolio for a total of $138.30 for the market value. We have our previous revenue claim, which we claimed that and then we staked it with our IOV. So the previous one, the 0.0053. This time we got 0.0068. All right, so this is our dashboard. So here we go. Here's our vesting. So here's the most recent vest we added in. So now we're up to 3 vesting. So we have our original where we spent about $100 for 1.32 IOV at the time of purchase. And that will unlock in 302 days. Remember, the revenue we get, we could spend immediately. You know, we could use that whenever we want. But the money we're locking in to earn the revenue, you know, takes a full year to unlock. And remember, I keep saying this over and over, but I just want people to understand. It's like getting a certificate of deposit from the bank or a CD where you choose to lock up $100, let's say, of your money. And they say if you lock up your money for 1 year, At the end of that 1 year, on that $100, they'll give you 5%, right? But you can't touch your money for a whole year. So the whole year goes by, let's say, you get your $100 back from the bank. The principal you gave them, you get right back. Plus, they give you 5% because you locked up your money with them. They pay you that interest. So kind of a similar concept. I'm locking up my money for a year. And in turn, whenever the studio gets a payment, I get a portion, a very teeny weeny little portion based on how much I'm staking. If I had a lot staked, then I would get it more. Right? But I have a little stake, so I get a little bit. Right? And we did this on July 27th, 2024. And we got a weighting of 2. The weighting is the longer you stake it, the more rewards you get. So the longest you can do is 1 year, so we get double. Right? We get double the rewards. Our second stake was on August 24th this year, which unlocks in 329 days. And we did 0.79 ILV, which at the time was $40. And that'll, again, weighting of 2. And then the most recent one we did, September 25th, which is a couple days ago, on Wednesday, I believe, unlocks in 362 days. And we purchased about $40 worth of ILV, which at the time was pretty much 1 ILV. So that was a good purchase. Pardon me. So now we have 1, 2, 3. 3 stakings, right? We're adding them up. And it's all collective. So like they're all put together. So whenever I get my payment, they take all my stakes together and they pay me out based on how much I have staked. So I'm up to 3 now. And I do these once a month, basically once a month. All right. Here's that revenue distribution. So I got 0.0068 ILV, which I don't know if it's current price or time of price. I think it's like the current price is worth 30 cents. So 30 cents of ILV paid out for about what was it? $138 worth. Actually less, because 2.11 ILV when I probably got that payment. This was just happened. But this is our second ILV distribution. So they're starting to build a little bit of consistency, which I like to see. You know, the very first payment was like a year or 2 ago, and it was a one-time thing. And then it came all the way to 2024, where they released the game, an open beta in July, and they've had 2 revenue payments since. Right, so as long as there's a market for this, there's an ecosystem, there's gamers coming in and spending money, you know, I'm gonna get a piece of their money. This is my ROI, right? My return on investment. I'm investing in the token and staking it to get a return on that investment. I want to get money. The ROG, the return on gaming, is when I actually play the game and I collect the assets and I want to go to sell them later. I don't have to sell them instantly. It's just the point is I'm collecting the assets through game time, right, to sell them later. So that's my return on gaming. This is my ROI, my return on investment. And this is my transaction. So right here, I sent in to this wallet on the 25th of 1.00819 ILV token. So that's that one token you see getting staked here, that 1.01. So this is my transaction for it. On September 25th, I received the money and then I staked it. And I did have to buy some Ethereum because I needed gas. So gas fees whenever you buy, sell, stake, anything like that. So this is just gas transaction. I said gas. It's my gas transaction to stake my ILV. It's not $31 total. I just put 31 in there, and of it, put like $5. All right, and that's it for our ROI portfolios. So now let's go look at our charts. My favorite thing to look at. All right, so as always, we start with our favorite asset, doing phenomenal right now, which is gold. And it's even starting to crack above this uptrend right here. So I had a little crack here back in the April timeframe, a little crack here above the May. Then here we are, September, it's starting to come up again. So keep saying it over and 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 over. Gold's doing fucking great. It's been killing it, right? If you look at on a year-to-date chart, it's been doing great. I always like to look at 1 year chart, but pretty much for a full year, look at this thing, just strong uptrend, just undefeated. Gold is undefeated. No reason to sell it. Keep saying it over and over again. It's phenomenal. It's a phenomenal trend. And now it's looking like it's cracking up. So if it's cracking above it, my guess is that it's probably going to lose some momentum. I don't think it's going to necessarily break this trend. I don't know. But it is going to lose some momentum because I don't think it's going to stay above this green line for very long. I think it's going to kind of do what happened here back in April and May. It's going to crack above it and then come down, crack above it and then come down. Okay, same thing back here when it broke below it and it came back up. Right, so it's going to stay relatively close in this trend, right? We're going to see what happens though. gold, phenomenal as always. Loving this trend. All right. Now the one I'm taking more risk on, my bonds ETF, GOVT. So as before in the past, we came to this wedge pattern, came to this point right around here, broke through it, and it's gone up and up and up. It started to pull back. This is around when they did the rate cut. So last week, was it last week or the week before? I think it was the week before. We had a rate cut, so it started to come down a little bit, started pulling back. I don't think it's going to pull back and drop yet. Right, we're going to watch the trend. I'm going to keep this bottom line coming up. Let's make this one red so I can kind of describe these trends better. So this was the bearish trend coming down. This is the bullish trend in green coming up. So red bad, green good. All right, so I think it might stay along this green line. It might come back, but maybe it'll hit around this line and keep coming up. So we're going to see what happens. Bonds, again, 30% of my allocation. So on a 5-year chart, I keep showing this. It came down a lot since COVID pandemic in 2020. So I'm hoping this is kind of the bottoming of it, and then we're going to be slowly rising up, right? And hopefully that's going to be in conjunction with the Fed lowering or cutting rates. So we were in like a 2-year rate hiking cycle, and we maintained rates at the higher cycle, at the higher rate. Now we're starting to come down. We had 1 rate cut so far. We might get another one. Who knows? But we're going to see by the end of the year. And next year, the Fed has already kind of implicated or insinuated that they're going to rate cut. They're going to cut rates more. So we're going to see what happens. US dollar, the inverse. Let's do this again. There you go. So red bad, green good. So the green broke, right? So in this pattern, the red broke, the bearish pattern broke, the green pattern, the bullish pattern went up. So in this one, the bullish pattern broke the green, the bearish pattern kept going, so the red's going down. So like I said, I'll extend this out and it'll probably come up, maybe hit this and keep coming down. We're going to see what the dollar's going to do. If we cut rates, my guess is, or if we continue to cut rates, my guess is this is going to come down. But since this is the global reserve currency, there's still going to be a lot of use case for it. Pardon me. And we're going to see what happens with it. But right now, dollar index coming down. So UEP coming down. So we're at 15%. There's not huge swings in the dollar, so I have it a little bit higher. But we're going to see what happens with it. USCI smashing through my bear pattern right here, my bearish pattern. So I had this bullish pattern in the green coming up, and this bearish pattern in the red lines coming down. But look at this start right here. Look at it right here from September 10th. I'm just coming up strong. So I don't know if this is going to be a reversal yet, because look what happened right here. This is back in April. So it came up to this pattern and then it came back down. Right? I need more consistency than this for me to just switch it up and put more money. I need to see a consistent pattern change. So this, it's breaking up, but I don't know if it's going to keep going up, right? It might come here and then come back down. We're going to see what happens. But it broke through, my bear pattern. All right, so we're going to see what happens. Now, if you look at it on a 5-year, this index has done pretty good. If you go all the way back to the pandemic, when we started money printing and locking people down, and shipping became complicated and all this stuff, commodities just boom. My personal portfolio, which I've been doing this for years, this was a great trade. It was a beautiful trade. Just like, this is phenomenal. Like, let's see, just out of curiosity, let's see. So if I measure it from April 20th, we'll say that where we're at right now. So up 149% in commodities over 1,600 days. But up 149%. So great trade in commodities. I don't know if this commodity trend is going to continue. Look at it on the all. But we're going to see. I'm going to watch it. More than likely, if this goes up, I don't know what that's going to do to necessarily my bond position, because how inflation and everything would affect rates. But I may increase to commodities. I maybe reduce either my government bonds or my dollars. We're going to see. I'm going to have to wait and see what happens. Commodities are more volatile, so I got to be careful. But right now, it's breaking this bearish trend. So we're just going to leave it as is. We're just watching it. It just barely broke. Not a big deal. Again, you look in the past, it broke before and it came back down. All right, so no need to necessarily change my trend. Excuse me, take a drink of water. All right, so that's commodities. Go to our stocks. For a full year, again, good trend. I've definitely not missed the opportunity in stocks, but I've made less because I've only kept it at a 10% allocation. So 10% is still 10%. Like if this goes up, my 10% goes up. You know, I'm making money. But if I would have had it at a higher allocation, like let's say gold, you know, which also has a great trend, I could have made more money. But if you compare gold, and I did this the other week just for a frame of reference, if you compare it to the S&P, gold's outperforming the S&P. Gold's up over, let's see, let's do year to date. So year to date, start of the year till today, which is September 28th, technically September 27th because it's Saturday, market closed yesterday. Gold's up 28% and the S&P's up 20%. We'll say 21 because it's at 20.99. Say 21%. So there's about a 7% gap between gold and the S&P 500. So nothing wrong with owning gold right now, even if you're not owning the S&P 500. Nothing wrong with not owning gold. But I could have had some good return on this as well. You know, this is up, let's see. Let's measure it out. So over this year, up 33%. Now, what is it? Here we go, year to date. So year to date, measured here, set it here, up 13%. Remember, this is equal weight. Right? This isn't the S&P where it's weighted heavily into Google, Meta, Nvidia, Tesla, you know, the big name stocks. It's equally weighted. All right, still up 13% though, so I could have had a 30% gain if I did better this year. If I came in at this time, you know, down here with it where it dropped, it came back up, could have got a little bit better return. You know, could have got 16%. Right? But either way, stocks are doing good. Like I said, I'm not optimistic on the market, even though it's clearly going up. But I still have 10% allocation. The point of this portfolio is no matter what, you're always allocated to all 6 of these assets at all times. You just put a different percent of capital to each one. The more bullish ones, you put more capital. The less bullish ones or the less optimistic ones, the less capital. Right, so that's kind of my thought process on it. So now we have the IBIT, the Bitcoin. Now, if you look at, we have less than a year's worth of data, unfortunately. Let's do year to date. We have this trend break happening right now, and I see everyone, you know, online on the crypto, you know, YouTube, you know, X, all the accounts and everything, saying like, this is it, it's the bull market. Well, they said it here too. And they said it here too, and they said it here too. So there's 4 times right now that they're saying it. 3 of those times, you know, it came up to this trend, hit it, or broke above it, and came back down. So I don't know what's gonna happen right here. Could come back down. We're gonna see. But at the very least right now, it is breaking this trend. Like I said, it broke it here in July, and it broke it here in June, and it peaked back here in March. So it's having a really hard time breaking this price. Now, if I go to my watch list, we'll just look at what was the price. So it was, call it 70,000, call it a little bit above 70,000. So say $72,000. So struggling to get back to $72,000, right, to the all-time high. So still watching Bitcoin. Like I said, I kind of trade. There we go. Dude, what is this thing's fucking with me right now? I trade Bitcoin kind of with the stock market. There we go. Didn't realize what was happening there. I trade Bitcoin with the stock market. So if I'm more bullish on stocks, I would add more to Bitcoin. If I'm less bullish on stocks, I would reduce my allocation to Bitcoin. That's just how I think about it. So as of right now, these are kind of just what the numbers are. Still Bitcoin at 5%. 5% is still a great allocation for crypto, I think, if you're interested at all. So that's kind of been the performance this week. All right. Thank you for watching, and have a good day.